All right, this is Thad with Revival Wealth Education Ambassadors, here to show you guys how to make more money in the stock market than you ever could in real estate. All right, what we're going to be doing here is some options investing, what they call selling calls for weekly income. All right, each contract, um, no matter the equity, whether it be Tesla, Procter and Gamble, a firm, don't matter. Each options contract is 100 shares, no matter the cost. All right. Tesla is currently trading at $133 per share. All right. For 100 shares of this company, you will need 13,300 bucks. All right. Now, I'm using the brokerage firm Robinhood to perform this. Should be a invitation somewhere in the comments. All right. For example, we got a bunch of rows in here. Only thing that really matters at this moment, you pay attention to the left, strike price, buy, sell, call, put, expiration date, and price. All right. Now, let's say, for example, you had 13,000 bucks and you wanted to make some weekly income with this company here. Pay attention to the $136 strike price to the left. All right. Now, this just means that if this stock currently at 133 ever goes past 136 at expiration, you will probably lose all your shares. But, of course, you can just come back and buy them right back if you wanted to, of course, at a higher price. But um, to me, it's worth it. Or you can just go further out of the money, but that just means the stock hasn't reached that price yet. Let's say 140 bucks. As you see over here to the left, I mean to the right. Um, oh crap! Hold a second. Sale call expiring January 27th. All right, $140 strike price. You're talking about a credit of 375 bucks. But if you want to play it safe and not risk losing your stock, you just play a play further out of the market. All right. You see this chance for profits at 75%. So probability that 75% chance that you won't lose your stock before expiration. But I like to play it a little risky. I mean, you're in the stock market, so everything is risky. Cancel that. All right. Try to make this video as short as I can. All right. For example, $135 strike price. You're talking about a credit of $573 for the week. Okay, this is money you get to keep. If the stock never goes past that price at expiration, you get to keep that money. You get to play again next week. So this is weekly residual income. Active, of course, but every Friday, you just come check it out. Make sure you don't lose your money. I mean your shares. I mean, you can always roll up or roll down, which say that for another video. All right. Now, let's talk about real estate. Keep these numbers in mind in your head. Pull up this whiteboard here, share. All right. So those 1,300, $13,330, equivalent of 100 shares. All right, excuse my handwriting, using my finger here. All right. and you was talking a $573 a week um return. Now, let's say you wanted to do this every week. 573 bucks times 4 weeks. It's $2,292 a month. Where on earth can you go and make $2,000 a month on $13,000? Now, real estate. Let's add another zero to this. All right. I'm sure you can find a house or property somewhere in your neighborhood for $133,000. All right. Now, let's say you want to rent this property out. You're adding a zero, remember? All right. So you're talking $22,920 a month. Where on earth can you go buy a property for $133,000 and make $22,000 a month? 23,000 in this case. All right. I hope that was helpful. And while y'all out there spending your tax money, you should be investing into the stock market.